Today we are going to discuss about the financial knowledge required for the engineers. Financial knowledge required for the engineers. As engineers, you should have very good technical knowledge, but that is not sufficient to be a successful engineer. So therefore, you need some financial knowledge. Not only financial knowledge, the complete management of your entity. Let me share another slide. Okay, I'm using the whiteboard now. So engineer is a manager. So what do you mean by manager? He is managing the things or managing the entity. So once you passed out from the university, if you joined say CEB, so you can be a maybe regional engineer. So you have to look after the whole region. So in telecom, you can be a regional engineer. Actually, they told the regional manager. So you have to look after the whole region. So normally any engineer will manage a small section of organization or whole organization. So you have to manage a small section of organization or whole organization. If it is a small organization, maybe the whole organization is managed by you. If it is a large organization, maybe one section. Later on, you will go to upper level. You will manage in several sections. Maybe it's called the division. So maybe after that's whole province. So like that, when you are going upper the ladder, so you have to manage some entity or some area. So you have to contribute to the management of the whole organization. So when you are managing an organization, what are the things to be there? One is a long-term business plan or corporate plan you should have. You should have a long-term plan. So this is called normally corporate plan, and also we call the business plan. This is typically for 3 years or 5 years. 3 years or 5 years. Normally it is about 5 years. So there are some guidelines to prepare such a plan. Then we have the visibility of our organization after about 5 years where we will be. So it's very important to prepare a good business plan or corporate plan to a company. So along with that one, you have to have a HR plan for 5 years, financial plan for 5 years. So all the things required for 5 years should be prepared and get the approval of the top management or the board of directors. Then it will be one important document to the whole organization. Now, state organizations, especially the public enterprises, that is the semi-government organizations, there is a process to be followed when you are preparing the corporate plan, and you have to submit those things to the treasury or some other entities. They are defined. Then along with this 3-year or 5-year plan, you have to have the key performance indicators, KPIs. From that, you can monitor whether you are going according to a proper plan, according to your plan. So therefore, you have the KPIs also prepared along with your corporate plan. Then 5-year plan, you cannot go as it is because sometimes maybe the political environment is changing, maybe the financial status of the company may be changing. So there are many factors affect into the business of your organization. So therefore, sometimes your corporate plan may be changed in between because of the some factors affected to your organization. But you can you have to have a prepare a good plan for accurate plan for 1 year. So that plan is called the annual business plan. So any organization should have a very accurate annual business plan. So with that one, you have to have action plan for 1 year. So what are the actions, and the monthly or the quarterly, you can have the KPIs or the what are the targets given to you. These things also should be there. So in the annual business plan, so many things should be included. So one important thing is your budget preparation. Your section or your organization, whole organization, you have to prepare your budget preparation. In the budget, you have to have the capital expenditure and the operational expenditure, normally called the capex and the opex. So you have to involve in the budget preparation of the organization. So capex is normally need for mainly for the projects you are doing. OPEX is mainly doing for the continuation of your services provided. So it can be your day-to-day expenses for the salaries and other allowances of the employees, and the other maybe the stationery cost and like that. So there are the recurrent expenditure. These are all also recurrent expenditure. It's a routine work. You need those things. And capital expenditure mainly needed for the projects in the large organizations. So you have to prepare a project plan, and you have to make sure that the return of investment is there. There are methods to prepare those things also. Then the board of directors give the approval for your project. Then the capex is allocated to the project. So the capex and opex should be there, and after that you will review the progress. You will review the progress by monitoring one in the financial progress. So when you are monitoring the financial progress, you need the financial reports. Financial report. There are mainly 3 financial reports. One is called the income report. Other one is called the balance sheet. Other one is called the cash flow. So these reports you have to analyze. So these are financial progress of the company. And you may have the project meetings. So you analyze the project progresses of the project progresses, and these are called the operational meeting. Likewise, the many targets given to you, whether you are achieving those things or not, is review. It can be monthly, it can be quarterly, depending on your size of the organization. So, Mr. Asela, you want to add anything to this?
Yeah, I think I don't know whether the students have gone through any financial training during the course. Anyway, capital expenditure is what you do to invest in assets for the company. For example, if you are building having a new building, that is the capital expenditure. New factory, new machinery will be capital expenditure. These things become your assets, and it will be depreciated in your books, especially the balance sheet. These assets will depreciate over time based on the financial regulation. And operational expenditure will immediately be deducted from your balance sheet, which is the income statement. So that is the effect that you need to identify. Capital expenditure becomes your assets, operational expenditure immediately hit your profit or loss in the income statement. So that is something that you need to identify, but it's not very straightforward if you do not have the background knowledge. So as financial reports, as Mrs. Ilaktila explained, income statement is also called the profit and loss statement. Uh, that is where you show you how you are performing financially based on income or and profit and loss. Balance sheet is where your what come or the assets and your liabilities are shown. Cash flow is very important for a company. If you are running a company, whether it is small or large, that is your survival. If you don't have cash, you don't have movement. You cannot move if you don't lose cash. Even though you have a profit, if your cash flow is bad, you will be not be able to operate anymore. So you will have to go for a loan or whatever, or debenture issue or share issue to raise capital if you don't have proper cash flow, positive cash flow. So these things are very important if you are to know at your level. Maybe at the beginning you have to know the fundamentals, but when you go up the ladder, you'll have to know it in detail. That's what I have to add.
Yeah, Mr. Asela, you are the Chief Executive Officer of the SLT Services.
Yeah.
Can you share your experience of preparing these things?
Yeah. So when you are in a company, yeah, definitely there will be financial managers, accountants, and the managers in the financial sector helping you. But uh, when you are in a managerial role, you only thing you at your level, at the entry level, you need to only understand the fundamentals. What is the behavior of capex? What is the impact of opex? If you spend capital expenditure, what happens to that? If you do operational expenditure, if you increase your operational expenditure, what will happen to the financial statement? That kind of cross effect you need to understand, and based on that you can predict what will happen to the company. So all three are very important, but mostly when you are running a company, you have to first focus on cash flow. If your cash flow is negative, you will not be able to continue operations. And in the short, medium, long term, you have to focus on your income statement and then the balance sheet. So these are the kind of priorities that we focus on. Uh, Even though if you are making profits, your cash flow can be negative uh, temporarily even. So you have to be very careful. If you don't have cash, positive cash, you cannot pay your salaries, you can't pay your rent, you can't pay for the fuel, electricity. So you will not be able to operate. So that is something that you have to be very vigilant in a company. Uh, and then the income statement or the profit and loss, where you have to declare profit. So your target is to have profit, right? But in short periods of 1 year or 2 year, you can make losses. But if you have to long term target to increase your profit and be positive. But in the meantime, you can make losses. That's not a problem. Uh, but as long as your cash flow is positive, you can move and make profits later. So that is what we need to know. But once you get into these studies, I hope that students will go for further masters of business administration, finance studies, or postgraduate diploma. It's better to do those or short courses in finance. It will give you more knowledge and understanding of how finances in a company behave. Thank you.